Hey guys, welcome back to the channel. Today I'm going to be talking about the fact that Bitcoin has just rejected off of the 200-week simple moving average. So if you enjoy the content, please do consider leaving a like and subscribing. Now, if we zoom in here all the way, we can see the prior weekly candle close had a wick going all the way above the 200-week simple moving average, the green line at around $22,700. The closing price coming back below it and closing under it. Now we're starting to head back down and hold this as yet another resistance and rejection point. So in general, I do expect that if we're continuing to hold this as resistance, we're going to be seeing a retest of these lows. And historically with Bitcoin, we've never really lost the 200-week simple moving average. Historically, the bear market bottoms have basically held this area as support on multiple instances. Really in 2015, we held it twice. In 2018 and 2019, we had basically two tests of it in both December 2018 and then January of 2019. Now, with today's price action, we're consolidating below this and holding it as resistance, so we really can't point to any time in Bitcoin's history where we've seen something similar. So this is going to be the longest time in Bitcoin's history where we've spent basically weekly candle closes below the 200-week average. But from a price standpoint, we've actually gone and seen Bitcoin go all the way below the 200-week average by about 30% in this March 2020 drop. So from a candle closing perspective, obviously we've only gone below it about 15%. All the way down to the wick, we've been at our peak extension about 22% below it. So while this might not be the farthest we've spent below it as a price standpoint, it is from a time standpoint. And I do expect that if we continue to hold this as resistance and reject off of it, the next logical level down that we could look to as some potential support is going to be the 300-week simple moving average, which today is at around $17,000. But do keep in mind that over the next few weeks, it will continue to move up because obviously 300 weeks ago, the closing price was a lot lower down and we're going to be averaging up. Now, I don't expect the 300-week average to be lost, and I think that from a candle closing perspective, we will hold this as support. And really with Bitcoin, we see these key longer-term moving averages and indicators lost as support during the extreme events and scenarios. And for me, I've already seen that play out. I've already seen the extreme environment where, we've had forced selling, liquidations, and basically everything you could possibly ask for a capitulation and some sort of sell-off. So we've had, major institutions like Tesla selling hundreds of millions of dollars worth of Bitcoin. We've had big crypto funds like Three Arrows Capital essentially blow up and go bankrupt. We've had retail capitulate. We've had altcoins down 90 to 95%, Ethereum down 80%. I've really seen the extreme scenarios that we see in typical bear markets. And I don't think from here that we have another major leg down. I think the 300 week is going to hold as support. I think from a candle closing perspective, we're going to remain above the $17,000 level. And from here, my expectation is essentially just going sideways in some sort of accumulation phase. So in prior bear markets, we've always had, the first stage where we really start to capitulate and then some sort of relief bounce and then further capitulation. And then from there, we lean into this accumulation and sideways phase, really just going and trending sideways for a several month-long period, with 2015 going from January to August, just kind of oscillating between the $200 and the $300 range. We saw something similar back in 2018 and 2019, essentially for this multi-month long period, just oscillating between $3,000 and $4,000. So I think we're going to be seeing something similar. And that could potentially be, resistance at the 200 week and then support at the 300 week, oscillating between these moving averages, building out that longer term base and accumulating from here. And I think that's most likely what we're going to see. I think that's the most probable scenario in my opinion. Again, it's not financial advice. It's just what I've seen. I've seen the capitulation. I've seen all that forced selling and the liquidations. I don't expect us to have another major leg down below the 300 week, holding that as resistance. So in general, that's my thoughts on the 200-week average and the fact that we've lost it. I think further resistance at the 200-week and then further support at the 300-week is most likely what's going to happen and play out over the next few months, leading into some sort of sideways phase and consolidation phase that we've seen in prior bear markets where, ultimately we have just a boring period, sideways for a few months, kind of building out this accumulation and base. So I hope you guys did enjoy this content. If you have any comments, suggestions, or feedback, please do leave those below. And then as always, I will see you in the next one.